Okay, we are live, ladies and gentlemen. If you guys are able to hear me and see me clearly, do me a favor and drop, I guess, what day is today? Thursday. Drop a 2 for Thursday in the chat for me if you guys can see me and hear me clearly, and then I'll go ahead and get ready to start tonight's call. If you guys can hear me and see me, drop some 2s in the chat. 222, 12, 3 2s, 2 2s, whatever you guys want. But let me know if you guys can see me and hear me. And then I'll go ahead and get this stuff ready on my end. Okay. Gotta move this. Alright, let's get it, guys. I see Brian said something, so what's good, Brian, the GOAT? So I guess that means we're live. So it means everyone can hear me, and we'll go with it. So, as always, on today's live stream, we are going to be going over the general market outlook, right? Our general market outlook. We're going to be going over a trade that I called out on Monday night's call live, and for you guys, I'm going to show you guys the update with that trade, why we won the trade or why we lost the trade. We're going to be breaking down the current market conditions and what we can expect for the remaining of this week and moving into early next week, right? So, as always, if, everything I'm saying makes sense, then do your best job to write notes and remember what I'm saying. And if what I'm saying does not make sense, also make sure to take notes, but more importantly, ask questions, right? I am not on this call because I need to learn how to trade. I am on this call to show you guys how to trade. So if anything I say doesn't make sense or is confusing or it's like, wait a minute, I analyze the market differently and what you're saying doesn't make sense, feel free to ask that in the chat and I'll do my absolute very best ability in my power to clear up whatever questions, comments, or concerns that you guys are having with what I'm talking about. And as always, if you guys are learning stuff and you guys feel as if, I'm doing a good job, then, shout me out on social media at Ali Cashflow, and, that'll go a long way for me, right? So with that, guys, we're going to go ahead and get into everything. We're going to keep this call short and sweet tonight. Again, we're going to be going over the last trade that we called out was over here. And then we're going to go into why we won that trade, and as well as this next trade that we took that we lost, unfortunately, right? Why we're going to go over why we lost that trade. And then we're going to go into where the market is currently at and what we can expect to happen moving forward the rest of the week, right? What we want to happen, what we want to see happen, what it has a likelihood of happening, and so on and so forth, right? So first thing we're going to do is we're going to get into Monday night. We're going to get into Monday night's trade, break that down super quickly, super fast, and we will go from there. So we were trading here. Let me go back to Monday night. So I think the market honestly was probably here. We'll say it was there. Because what time do I do? I do these at 8. I got done. I probably called it out. Probably right around here, honestly. This is where we were at on Monday night. And we're going to go over why we made this analysis the way that we made it. And we're going to go into why we won, right? And then again, if you guys have... Hold on. Sorry. It's my dad. At the worst times sometimes, but let's do this. What was I going to say? There's room, whole train of thought. Okay, so we're going to go into why this trade won. We're going to go into the markup process for that. And if any part of it is confusing, feel free to ask in the chat, right? But this part should be relatively fast, okay? So Monday night, whenever we were analyzing this pair, we noticed a couple things already. One being where price had already rejected at in regards to a support level. And aside from that as well, here, let me do this as well. Turn off notifications. Okay. But yeah, so the first thing we noticed is that we bounced off of the support level in a heavy manner, right? And so that gave us our first indication that the market was going to have a bullish outlook for the remaining of that night moving into Tokyo session and London session, right, moving forward. Same thing that happens tonight, right? We're in Tokyo, and we're moving into London. Okay, so what we had expected was that there was going to be continuation in that direction, in that upwards direction, right? That we bounced off of the 4,500 level psych zone, which is right here, right? The 4,500 psych zone. And we were going to continue to the next one, which was 4,750, and then eventually back to 5,000. Okay, so that was our overall outlook on that, right? Another couple of reasons that we could consider entering this trade was that there was a big liquidity dump right around here, right? And how do we know there was a liquidity dump? Because there is a big bearish candle that dropped off and started a further downtrend. Okay, so there is bearish liquidity in that area. Meaning, and since the market never came back up to fill this price gap, it's probably likely that the market was going to go up to fill that price gap. Okay, so that was our second confirmation. Number one being the whole number psych zone along with our demand zone. Now, those were our two confirmations. Confirmation number three was that the gap needs to get filled. The gap being filled isn't something that always happens, but it is something that I would confidently say happens, I'd say 7 out of 10 times. You know, if you have a big drop off, eventually the market is going to fill that gap, right? And the farther away you are from the gap, the more likely it is that it's going to get filled faster, okay? If it, you know what I mean? If it hasn't been filled yet already. So, taking all of that into consideration, right, we have confirmation number one, right? We had confirmation number two, confirmation number three, right? And now what we did on top of that is we drew a fib, right? We drew a fib from this low, right? This was the low of this movement. If this was the top, this would be the bottom. So this is the most recent low. And now this was the most recent high, okay? How do we know that's the most recent high? Right, because we just go like this, right? Low, high, low, high, low, high, low, high. Now we have low, high, but this low here is higher than this one, which is an interruption in that pattern, okay? Meaning now we're not going down anymore, meaning that we have something that now is going up potentially, okay? Now, the easiest way to identify that something is going up, right, is that if we look closely, we zoom in, you just look at it, okay? Here, this low is now lower than this previous low right here. Since this low is higher than this one, that means that now that is a bullish environment that we are trading in. It is a bullish area now. It is a bullish market. It's a bullish trend, whatever you want to call it. Right? So now instead of having lower lows and lower highs, we're now having higher highs and higher lows, right? So that means that we're in an uptrend, okay? Even though we had this reversal, right? The whole reason of why I'm saying this is because this is where we would draw our Fibonacci. Why? Because we had a break of structure, right? We had a sign of a reversal happening. We had a new swing movement. Okay, this was the previous swing movement, and now this was the more current swing movement. And the really current swing movement that we're in right now is this one, right? Which is what we were analyzing that day, right? But since this move technically isn't done yet, how do we know it isn't done? Honestly, without overthinking it, it's because you're looking at it. You know what I mean? It's not done yet. You know what I mean? This is kind of, you can just kind of look at it and tell that it's in the middle of something happening at the current moment, okay? It's not a finished move, right? So the most recent finished move would be this low point to this high point, okay? So you would take your fib from the most recent swing low, okay, being this. And now you would take it to your most recent swing high. What does the swing high and the swing low means? It means like the general high and low of the move itself, okay? Because there are multiple highs and lows in this swing high and swing low. Or swing low and swing high, my bad. Right? So it's a little confusing until it's not anymore. But to sum it up completely, I'll draw it like this. Let's say that this is our chart, right? This is a high. This is a low. This is a more recent high. This is a more recent low. This is the most recent high. This is the most recent low. Okay? Out of this entire move, where would you say the swing low is? Where is the most bottom low? Right? That would be down here. Okay? And the most recent swing high of this entire move would be the top, which is up here. Okay? So the swing low and the swing high. When you draw your fibs, if you're doing it in an uptrend, you draw it from the swing low to the swing high. Okay? So that's all we did so far. So now that we understand that, let's go back and let's look at that on the actual chart. Okay? So swing low is down here and the swing high is up here. The way that the fibs work is when it makes this movement, swing low to swing high, it's either going to come to the orange zone and go up, it's going to come down to this gold zone and then go up, or option number 3 is it's going to go down to the 78 zone and then go up. Okay, since at this current point in time, we had already passed the orange zone and the gold zone, the next most likely thing to happen was we were going to buy off of this 78 zone. Okay, so what we said live and what we did on that call was this. Those are all the confirmations that we had. I'll go over a couple others that we did have, but those are the main ones that we had. So what I had said on that call is we were going to wait until the market broke back in to this gold zone, meaning that right now how we're below this yellow line, we wanted to wait for the market to break back into the yellow line. Once the market broke back into that yellow line, we would buy, and we were going to target around up here because this is where the previous high was. So we can easily target where the market already was, okay? So that was the target, and our stop loss was right around below here somewhere. It was below the 78 area. So that was the setup. So what we ended up saying was it was like somewhere, I think we entered, I don't have the exact price. I have it in the Discord, but I mean, I guess that's not relevant because that's going to take too long. But either way, we had around a 30 pip take profit more or less. We put it right around here. Probably right around there, honestly. Right? Take profit 1 more or less. Yeah, and then our stop loss, we placed our stop loss a 3-to-1. So we placed our stop loss right around here. Again, just a simple 3-to-1 trade. And then literally as soon as we got off the call, this is exactly what happened. As soon as we called it out, it consolidated a little bit. I think it came down and almost stopped us out. Let's see. But yeah, right there is that little wick out. So we didn't get stopped out though. We didn't, right? I just didn't put it at the exact place. But once it consolidated there, then it went straight to the exact profit target level that we had. And it broke through that, which is where we got into the second trade of the week. But to finish this one up, so the exact entry then, like we almost got wicked out there, but we didn't. So we got lucky with that one. But we were like right, I'd say this was probably around the entry. As soon as we got back into that gold zone, we entered. And then we were in profit throughout most of the night. And then after that, that's when it reversed during London. And then after London, that's London into New York is where the move actually happened, where we broke through the 47.50 level and then went straight to the 5,000 and higher. So that was a beautiful, clean trade, right? And the cool thing is that we were sleeping, right? So which was even better. You know, as soon as we sent the trade out, look, let's see. Might as well just show you guys since this is on a recorded call. Right, so this was Monday. Right, 9:18 p.m. is when we sent the trade out. Man, I hate when my stuff doesn't load. Okay, yeah, but 9:15 we sent the trade out. And the stop loss was 559. 559 was the stop loss. And then the next morning, right, we see here, the stop loss almost got hit. If you look really close right there, it almost got hit, but it didn't. So it didn't. You know what I mean? So, and why did it not get hit was because on that call as well, we also knew that we could expect a bearish pullback before we had the full continuation of the bullish move, which was normal and to be expected. So that is why you put your stop loss where your stop loss goes, or where you're supposed to put it at least, right? So, because typically, and we'll go into why liquidity targeted right down here in a minute. I guess that is something useful to go over as well. So we'll cover that in a minute too. But that was that trade setup. So the trade, pretty much as soon as we woke up, the trade was already done. Before I wake up typically around 7-ish, usually. You know what I mean? 7-ish. So at that point, the trade was already done. You know, so that was super cool. You know, we were able to make, you know, an entire trade's worth of a trade before we even woke up. You know, which is always a cool feeling to have, right? So taking that into consideration, before we go into this losing trade that we had, and before we not end off the call, but, you know, before we end off speaking about where the market is currently at, let me just tell you, I put the stop loss where we put it and how we were able to avoid getting stopped out from that. Okay, so if we had it at 559, I have it a little too low right here. I have it at 556. The little micro pips do matter, believe it or not. So at the bare minimum, you always have a 3-to-1. So that's the main thing, and you always just want to have a 3-to-1. But, okay, let's just say this for example, right? If we're expecting to enter here, right? And we're, again, every time the whole point of a stop loss is to obviously save yourself money, right? But the most annoying thing that could possibly happen is when you put a good stop loss, right, and you're trading safely and you have a great analysis, but you get stop hunted, right? Or the broker is targeting you, or whatever you want to call it, you know, or market manipulation, or whatever, okay? Whatever you want to call it, the worst thing that happens is when you get wicked out of a trade, right? Which almost happened here, right? Where you almost get wicked out of a trade, or when you do get wicked out of a trade, and then the market goes in your favor. And God forbid you're sleeping, or, you know, you're at work or something like that, and then you come back and you look at your phone and you see that you were stopped out by 1 pip, and then the market went off and exploded 100 pips, right? That's you know, it's one thing to lose a trade, but when that happens, that shit's just it's just annoying. You know, that's an annoying thing to have happen to you, right? So taking that into consideration, an easy way, there are 2 strategies that you can do, right, in order for you to avoid having that happen to you as often, right? Not that you're always going to be able to avoid it entirely, but avoiding it more often than not, right? Number 1, okay, is using psychological stop losses, right? Where you're not actually putting one there, right? Where you're not actually putting a legitimate stop loss order, right? Where if the market hits that price, it's automatically going to take you out, right? That is highly recommended if you work a normal job, though. If you like enter a trade and you're not able to be on your phone and you're not able to monitor the trade, you need a stop loss. You need one, okay? But if you're somebody with a little bit more luxury and you might work from home, or you're able to go on your phone, or, you know, periodically, or whatever the case may be, you can do something known as a psychological stop level, where you can still have your stop loss here at 559, for example, but you're not going to have a stop loss order, right? You're just going to kind of keep track of where the market's at there. Why do you want to keep track of where the market's at? Because this stop loss is in the middle of a liquidity area, right? How do you know it's in the middle of a liquidity area? Because all you got to do is look at it, right? Here, we have a little bit of an impulsive move, right? That impulsive move is very close to where this support level was. This support level is very close to this support level, right? This support level is very close to this one, and so on and so forth, right? Meaning that if you take the high and the low of that support area and you draw a box like this, right? And let's just say you were to extend that box right around here, right? That is known as a liquidity. It's known as a liquidity zone, okay? Now, what do liquidity zones do, right? They attract the money. What is the money? The money is the people that are pushing the price of the market, right? Up and down, right? Those are the banks and institutions and hedge funds, so on and so forth, right? That is where they also are putting price targets, right? Because it's very common to think this, right? We are not the only people in the world that were able to predict that the market was going to go up, right? Matter of fact, probably 50% of the traders in the world were buying the market, right? And the other 50 were doing what? Selling it, right? So now, or maybe even would probably more, right? Because if we're thinking that this is an obvious buy, there's probably a lot of other people doing that too. Probably 70% of buyers are buyers, or maybe even 80% are buyers, right? Just because 80% of the people are buying does not mean that they control 80% of the money in Forex, okay? Literally, it's like the top, a handful of organizations and companies and institutions are the ones that move the price, okay? So now if they're thinking, man, a lot of people are buying right now. There's an influx of buy orders coming in right here. There's a heavy amount of buyers in the market. Billions of dollars worth of buyers, actually, probably, right? Why don't we dump $1 trillion and push the market down? Probably, where do you think, if everyone's buying right here, where do you think they're going to probably put their stop loss, right? Maybe they're going to put it 5 pips, 10 pips, something around there. We don't know exactly where they're going to put their stop loss, but they'll probably put it somewhere around these previous lows, right? Why are they going to put it there? Because that's what retail traders do, right? That's what, you're doing. That's what I'm doing. That's what the smart money concept traders are doing. That's what the ICT traders are doing. That's what the support and resistance traders are doing. That's what, everyone is doing it. Why? Because everyone trades with a stop loss, right? What happens when a stop loss gets hit is somebody makes money, right? It's either you or the bank, right? In your case, your take profit is someone else's stop loss, technically speaking, right? But the point that I'm getting at here is that two things. Again, the way that you don't get wicked out of a trade, okay, is by not setting your stop loss where you typically would, okay? Obviously, that's that's something, if everyone could do that, they would, right? No one will lose their trades, right? But the concept is similar. It's kind of simple, right? Whereas if you can identify where is the money at, where is the untaken liquidity, right? And you just kind of draw a box, right? It's not going to be perfect, right? But you just draw a box, right? That is more than likely where the money is. Not always going to do it, right? It's not always going to be like this trade could have very well just continued up in our favor and gone all the way up. But, if you think about it for a second, okay, if you just think on a normal level, we're just going to use common sense here, okay? Why did the market look like it was doing so good and then just fucking tank right coincidentally to this zone? And then as soon as it hit that zone, what did the market do? It fucking explodes, right? Why do you think that would happen? Right? Because of a stop hunt or a liquidity grab. Okay? What is the difference between them? Absolutely nothing. Okay? A stop hunt is a liquidity grab. What they're doing is they push price down to take all of your fucking money and to take everyone's money who had their stop loss. You know how many traders probably waited for further confirmation? Let's just say all the traders that entered here. Right? Why would they enter there, Ollie? Let's just see. Maybe we can identify something, right? Let's just see what we can see right here, right? Let's just say that traders entered off of, they wanted to enter because they had a good pullback opportunity. Let's just say bearish pullback and they were continuing. They saw 3 bullish candles or whatever, so they enter right here, right? Good entry, market's going in their favor, and then boom, they get stopped out. You know what I mean? All of them lose their money. They lost that trade. They're thinking, damn, I'm a bad trader now. And then what happens right after that? The market goes up in their favor. Okay? So the way that we avoid that, again, is one, you have to get the best entry possible, which we just happened to, we kind of got lucky with. Luck had a little bit to play with that, I won't lie. But also, taking into consideration this liquidity zone, just put your stop loss below it. You know what I mean? Put your stop loss a little bit bigger than you normally would. Let's just say that, for example, we wanted to take this trade and we wanted to put our stop loss here, right? That looks like a pretty decent stop loss, you know what I mean? Right? What you would do is just make it a little bit bigger, right? And then granted, that's increasing the risk, yes, but it's also saving your butt a little bit in case these kind of situations happen. Aside from that, there really is no way to know if a liquidity grab is going to happen or if, it won't happen. There's no way to know, right? And anyone that says they know, they're fucking lying to you, right? There's no way to know. It's impossible, right? Unless you're working at a bank or whatever, it's impossible for you to make that kind of prediction, just because you don't have access to that information, right? Can you use volume? Yes. Can you use supply and demand? Yes. Can you use indicators or, whatever? Yes. Right? Does that mean it's going to happen? Absolutely not. You know what I mean? There's no way to know. So the two best pieces of advice that I can give you because sometimes it happens a lot more often than you think until you start doing this. You know what I mean? And I got the psychological stop loss thing from a friend of mine that's in Canada. Shout out to Keon. If you ever see this, bro, shout out to you. But his name's Keon. We used to trade in a group together. But he's the one that told me that idea, because there were some times where I get stopped out by a wick. That happened to me maybe like 2-3 days in a row, and it pissed me off. You know what I mean? And I didn't know. Again, there's nothing you can do to fix it from happening. But what he told me was this. I thought about just putting the stop loss lower, which is common sense, right? But he's the one that suggested, since I have the freedom to be on my computer, is use psychological stop losses, right? So because what would happen is, if I noticed, for example, right, that the market was coming down to here, and I'm watching it, I can be like, damn, dude, that's, if it keeps going, then I'll close the trade. Yes, I'm going to lose more money, but I'm willing to do so, because what if this happens instead and it goes up, right? So it's just a risk you got to be willing to take. It will result in a deeper loss, yes, but again, you're watching it. And you're not just waiting and praying it goes back up in your favor. You're watching the market to see, is there indication that this is a stop hunt, or is this just a continuation? You know what I'm saying? Because that's kind of it. How would we be able to tell this was a stop hunt? Very, very easily, ladies and gentlemen. Okay, let's go down to the 1 minute time frame. Oops. This is how you tell. So if you're watching this, you would be watching a couple of things, okay? Same concept that I just told you, okay? Look how fast this shit fucking dumped here, okay? 5 minutes, it went all the way down there, right? When right here, it was consolidating, right? Normal movement, we're trading here, we're trading. Boom, what causes that dump? Typically, it's smart money. Typically, it's the institutions. So now you wait a couple minutes. You're thinking, okay, damn, dude, it's fucking melting right now. Let's just wait a little bit and see what happens, and now you would see, if you had waited a little bit long enough, right, a big bullish candle formed. You could consider that a bullish engulfing candle if you wanted to, right? What happened right after that bullish engulfing candle? A bunch more bullish candles, right? So that first candle, indication one that it's a liquidity grab is how fast it's moving, right? Indication number 2 that this is a liquidity grab is at the bottom, you have a strong reversal, okay? And really that's all you would need. And then you just need to kind of you have to have some, cojones there for a minute, and hold the trade. You know what I'm saying? If not, then you lose the money, right? But again, you don't just hold it because you're not wanting to take the loss. You know what I'm saying? You have to be aware of what's happening right now. And is it worth holding the trade, or should you close it? So yeah, right? And then, so that's the trick number 1. The psychological stop loss, only recommended if you have the freedom to be on your computer and or phone to analyze the trade and make an educated decision on, is it worth holding, right? If you don't have that luxury, right, don't do it. The only other thing you can do to prevent a wick out from happening is just put your stop loss a little bit lower, right? Put it a little bit lower, and that's it. Make your take profit slightly bigger. If you're going to make your take profit, it always needs to be a minimum 3-to-1 risk reward, right? So let's say you had a 4-to-1 risk reward, maybe you should make the stop loss slightly bigger, right? Slightly. You know what I'm saying? And yes, but Ollie, it's a great trade. Okay, well, it could be, but if you get stopped out, then you're going to be kind of pissed off. You mean, like, damn, I could have made it a 3-to-1, made the stop loss a little bit bigger, and I wouldn't have gotten stopped out. You know what I mean? Because if I was being a little bit greedy, I would have got stopped out on this trade. If I was being greedy and I wanted to, let's say I wanted to, Let me go back to the 5. Jordan, I'll answer your question in just 1 second, my friend. Let's say I was targeting this zone up here, right? But I wasn't happy with a 3.5 to 1 because it looks a little ugly. You know, let's say for example, I wanted something nicer, and I did a 3 to 1. I'm sorry, no, and I wanted a 4 to 1. Yeah, if I did a 4 to 1, where's regular 4? 4 to 1 is right there. You would get stopped, right? Would have got stopped right there because I was being a little bit greedy at 8.5 pips. You know what I mean? Or what I could do is what we did, and we might as well make it 10 pips, and we'll make this a 3 to 1 trade, right? We'll make it 10 pips, and now it's a 3.35 to 1, right? What's the difference? I still got the same amount of pips. You know, I got the same amount of money still. The only difference is I risked a little bit more. This is like say for example, if my stop loss is $200, right? Right now it's around like 180, right? If I'm doing a 180 stop loss, that would turn it into a $200 stop loss. Is the example that would do. You know, you're just risking a little bit more just to give yourself that pillow of in case there's a liquidity grab, you won't get grabbed. Your liquidity won't get grabbed. You know what I'm saying? So that's what that's for, okay? And now to answer your question, Jordan, Jordan is asking, how do you know if the trade is worth holding? Few reasons, man. There's really not too many things you can do to say like for certain. It's just, at a certain point, obviously this is going to be a corny answer. No one wants to hear this. At a certain point, it's kind of just experience where it's like you can kind of look. Experience meaning that you're still going to be wrong sometimes. You know what I mean? But your experience will allow you to kind of tell. You'll be able to look kind of really fast at everything, right? Like you'll be, let's just go back. Let's put the market, select a bar. Right? Let's say we're looking at it right, and like, oh shit, you know what I mean? It's going in your stop loss, you're like, damn, dude, I was at some profit, you're freaking out now, do I close the trade? Why is this happening? Does Ollie suck at trading? What do I do? You know what I mean? So when that's happening, okay, first thing that I would look at right now, okay, again, first thing that I would look at is a change in market behavior, number one. But you're doing this fast, because this is on a 1 minute time frame. You know what I'm saying? So, again, that's where the experience would come into play. Is you got to know how to hit your checklist fast. You know what I'm saying? Or at least faster than your stop loss would get hit. Either way, if it loses, it loses. You know what I mean? But first thing, off rip. Consolidation, strong push. I see Steven, saying that the stream is frozen. Am I frozen right now before I keep going? Frozen or not frozen? I hope I'm not. Will somebody do me the favor and tell me if I'm frozen? Or is this? I'm not moving the screen right now. I'm doing this. So no, do you guys see this or no? That way I continue. It takes a couple seconds of your time to say yes or no. I guess I am frozen. Because I can't. Let me see this. Cat, am I frozen or not? Oops, my bad. Caps are on. Sheesh. Yo. Lagging? Okay. Okay. I mean, we'll see. Yeah. Okay, we'll see. So, do you see me on the phone right now or no? Yeah. Is it? Damn. Okay. All right. Well, I'll see what I can do. All right. Sheesh. Let me get off Wi-Fi. You know how much money I pay for fucking Wi-Fi, guys? And Xfinity, dude. I'm stuck in this fucking monopoly with Xfinity, and I hate them, dude. I hate Xfinity. Cause I live right here. It says I'm good. You know, it says I have good latency right now. But I'll do what I can, guys. I'll do what I can. Maybe making myself smaller will help. Yeah, but probably like $200 a month for fucking trash internet. You know what I'm saying? But what can you do? Okay. So first off, to finish the question though, is what I would do. Number one, let me close this out. And close this out. And I'll close Discord out. Okay. Is just look at we look for a difference in character, right? The character meaning how is the market acting, okay? So here we're in a normal trend. And then here we have a big drop off. So that's a sign number one of something to be, I would say that that's bullish in the sense that it's going to need to go up again. You know, if there's a strong drop off, it usually means that there's going to be a strong correction back up. So that's just the number one bullish sign that I would say. Is it always going to be that way? 100% not. But again, in the high tense situation where this is happening fast, that's what you would kind of look at. Okay, we're dumping right now. So there's a lot of liquidity going on right here out of nowhere, right? Now, number two, let's just see if we can see something else. Right, that looks bearish as well. So then, 1 minute, no. Since we have a demand zone here, where it says demand, and that somewhat is lining up with this yellow zone that we already have marked up, I would kind of wait and see. I would maybe take that assumption thinking, okay, we're going to dump down a little bit to here, and then we'll probably go up. So I would wait for that. You know, I would wait for a dump off into this area, right? And see if the market starts consolidating here. Is it going to go higher here? Are we still dumping off really, really, really fast? At that point, that's when you would make a different decision. Right, but aside from me just assuming that since we're dropping off, we're probably going to go back up. Second reason why I would assume that is we have a point of interest and we have a demand zone. Okay, 1 minute time frame demand zone though, so it's not like the biggest thing, but you know, it's just something that's worth still being aware of. Because again, if we're willing to lose down to here, just because we're starting to go into drawdown doesn't mean that the trade is wrong. You know, it just means that it's pulling back on you. So that's how you would make that decision to stay in the market, just based off of what the market looks like it's doing in that situation. You know what I mean? But what you wouldn't do is when the market pulls down to here and it consolidates a little bit, you wouldn't close the trade early. You know what I mean? Just because you're in drawdown, right? When you're in the red, it means you're in drawdown. Like, you wouldn't close the trade yet. You would let the trade hit your stop loss, right? The problem, what this example is for what you're asking, Jordan, is how do you know to hold the trade? You only hold the trade if you're watching it. And how long do you hold the trade? Kind of however long you're willing to make the loss bigger. You know what I mean? It's not like that, because again, it could never go back in your favor. What if the market keeps fucking tanking? You know what I mean? At a certain point, that's where you would you end it. But I would say, let's say your stop loss is 10 pips. I'd say like 13 to 15 pips would max be the psych stop loss. Because if not, then the trade, then that's just, obviously you could hold the trade forever and never lose a trade. You could. You know what I mean? But aside from that, it's just kind of looking at what the market's doing in that current moment. Right here, just based off of what I just said to you, it looks like it will keep tanking, realistically, I'd probably be a little bit worried in that situation. Like, damn, dude, maybe I'm going to lose this one. So the only thing I would do is if I was like, man, I'm not really too confident in this setup, is I would wait to see what happened at this demand zone, right? At this demand zone that's right here. Now, if we want to wait a second, let's see what happens, right? So faster than we could even see it. So I would have just waited and seen, bro. You know what I mean? If I saw it realistically dumping past that demand zone, these two gray lines right here, the demand zone, if I would have seen it pushing past that, I probably would have called the deuces, honestly. If I'm being real with you, if I wasn't asleep when this happened and I was watching it, I probably would have been like, damn, dude, I'm going to get stopped out. I wouldn't have closed it, though. But I would have assumed that this stop hunt would have came and got me, too. You know what I mean? But just because of the fact that it was pushing down fast, you know what I mean? You can't really, again, there's no right or wrong answer for me. I mean, a wrong answer for me to give you, Jordan, to answer the question honestly, a wrong answer would be for me to tell you, oh, this is exactly how you tell. There's no way to tell, bro. It's just kind of like, that's where it really boils down to experience, dude. To be completely God honest, truth with you, is you have to have the experience, for one, to see what's happening, and for two, to make decisions about what's happening. You know what I mean? So, until you or other traders that are in a similar position having that same question as you, what my best piece of advice would be is don't do that for right now. You know what I mean? Don't try and extend your stop loss for right now, right? Right now, the best thing you could do is just put your stop loss and study, right? Because then you'll start seeing it for yourself if you have the opportunity to, again. But if you're working, I know what you do for your job, so you probably have a little bit more freedom. But, like, let's say you didn't have freedom to check your phone or whatever, you wouldn't do that. I would say you would get on, you would set your stop loss, and if you're unsure if you're gonna get stopped out, just make the stop loss a little bit bigger. Add a couple of pips. Again, if your stop loss is 20 pips, make it 23 pips, right? If your stop loss is 10 pips, make it 12 or 13 pips. That kind of scenario. And you don't need to do it every single time. It's just, it could help you. You know what I mean? It's just something useful that you could do. But, a good example. Here's a perfect example as to why you shouldn't do what I just told you every single time. Let's go back to the current market. Here's actually perfect example. And I was like, damn, where the fuck's the trade at? Dude, market tanked today, bro. Sheesh. That's crazy. Yeah, like, what caused this impulsive move? I didn't check if there was news today. But to sum it up, we probably could expect this to get filled. You know what I mean? Because the market dumped off so bad so far, it'll probably come back up to here. Well, who knows when? Hopefully soon, I guess. But let's go back to here. Okay? So, I thought the market was going to continue going higher. Right? I thought we were going to continue making new highs, and that, this was kind of the end of dollar dominance, I guess, for lack of better words. And then what ends up happening, a whole bunch of fuck happened this past week, and everybody's selling their stuff, which is causing a lot more liquidity to go back into the dollar. And what ended up happening was market fucking tanked, dude. How much did this tank? I sent that trade out Tuesday night. I shouldn't even have sent that out because I don't trade at nighttime, but I sent it. And first fucking trade I send out at nighttime. Second trade, I lose it. Right, but, yeah, 100 pips, 126 pips since then. But, okay, what I was getting at was this. Right, I thought this was a decent buy. Right, I thought we had a nice bullish continuation here. And we did. We did have a good move here. Right, what I did though is I made the target too big. Right, this was a tiny little hyper scalp 10 pip trade. right? But I treated it like a 30 pip trade. And what happened is kind of the same thing, bro. We dumped off right here, right? We dumped off. I could have held it, right? And I could have held it, but then what would have happened, right? Fucking now I'd be 126 pips negative. You know what I'm saying? And that'd be terrible. You know, so in that point, you can't always predict it, bro, is what I'm trying to get at. You can't always predict a stop hunt. This isn't a stop hunt, though. This is a reversal happening. You know what I mean? What caused that reversal? I don't know. Maybe we were too overbought. You know, too many buyers were in the market, and then selling pressure came in. You know, obviously, it was kind of clear to see a couple of things, right? If we wanted to look at this, right? What day was this? February 14th, 23rd. Boom. Okay, so one time, two time. The last time we were trading this high was a month ago. And we were barely up there. As soon as we went that high, we dropped. The last time we were that high, December 17th. So every time that we were around this level, as of recently, we've been tanking every time we got near that level. So I kind of knew that already, but I thought that since we had like hit it so many times so recently, I thought that this was going to be the time where we broke through and continued on, you know, maybe back to above the 6,000 level, which the 6,000 level hasn't been traded at again since, you know, late November, early December. So I just had a feeling that it was going to go up higher. You know, maybe was that a little cockiness? Sure, possibly, yeah. But I had confirmation still, you know, that I felt comfortable taking the trade. So we took the trade. Granted, looking back, there were things that I could have also spotted that would have, you know, maybe I should have waited a little bit longer, but we didn't, you know, so we lost that trade. We got stopped out here. And that's just me being real with you guys. You know what I mean? I thought that, you know, it was a good setup. And not that it wasn't a good setup, but clearly it was wrong. You know what I mean? Oops. So, it was that. You know, we lost that trade. Why we lost that trade, let's figure out why. Aside from the fact that we were at a heavy supply area, sell-off area. I mean, realistically, dude, I mean, I'd be lying. I'd be contradicting myself right now. Because I thought it was a good trade in the beginning. I thought it was a good setup. And that's where it's, you know, sometimes I feel like it's my job, you know, to, like, tell you guys, well, why was this a bad trade? But, you know, I think I'm a good trader. You know, I have no doubt in my strategy or the system that I use. I had enough confirmations. If I was to go over the confirmations really quick here, let's do it really fast. I had over 4 confirmations that this was a decent buy, so I bought. You know, but put the trade right there. This is where we sent it out. Okay, let me go to the 5 because that's what I was on. Fix this. Boom, boom, boom. Okay. So, let's see what we had. This one was RSI we didn't use at that time. I relied on this stochastic, which was a forced one. Not gonna lie, looking back. Really, I just saw this continuation pattern, which is an ascending triangle. I thought, you know, we had our, and it was valid, right? It just, I overestimated the power of the triangle, right? It sounds stupid, you know what I mean? But I overestimated the power of that, right? So we had one confirmation, we had the triangle. At that time, I assumed this was a continuation pattern simply due to the fact of this previous bullish movement right here. I thought that we were going up, triangle pattern continuation to go higher. That was my thought process there, right? Along with the fact that we broke through this 5,000 level strongly, right? And I kind of saw this as like the retest, even though it wasn't. I kind of forced myself to think that it was. And I thought that was a solid break and retest, which made me confident in the setup a little bit more. So that would be my third confirmation. Fourth, if I even had a fourth, honestly, just how many times we were touching this support, this resistance level, I was like, okay, we're hitting it that many times, we're going to break through, which we did. But that, I know I had a fib here as well. Again, swing low to swing high. Since this was a little bit more of an aggressive move, it happened like fast. I figured, okay, well, right here is a good retracement zone. If we zoom in closer to this retracement zone, what will we find? Right? Doji candles, right? Bullish doji candles as well. So, again, there's 5 confirmations there using the fib. And then I said, let's wait for the breakout of this triangle. When we get a breakout of that triangle, that's when we'll enter the trade, right? So what did we do? We waited for the break of that triangle, and we were good. We were Gucci. You know, I was happy. I was excited. Whatever, right? Almost hit 10 pips. Could have put my stop loss to break even, but I didn't. Right? How far did it get before it started reversing on us? Right under 10 pips. Right under 10. We'll say 10. 10 pips. Then it starts reversing on us. Then we were just wrong. Nothing you can do about that. You got stopped out. But it was a good thing we closed the trade. Because if we didn't close the trade, moving forward, right, this thing, it kept fucking going down. You know what I mean? So, obviously, the selling pressure of that major support level, or major resistance level, was stronger than all the other confirmations that we had for this trade. Right? Which, isn't really surprising. But that's why I lost that trade, though. So I would say, even though, yes, I had okay confirmations, one, I was doing it out of my normal trading session. Hold on. Yeah, one, I was doing it out of my normal trading session. Two, the some of the confirmations that I had were kind of forced, and that probably came from me being a little bit lazy, we're boiling down to that. I sent the trade out late, so, I wasn't giving it my full focus like I am when I'm trading New York session. Is that an excuse? Yes. You know what I mean? But, we got to take account of we got to see, why did we lose a trade? You know what I mean? Those are all different factors that are different from my normal trading day. So those are all different reasons why we lost the trade. But yeah, so that's why we won that first trade. That's why we lost that second trade. You want to know the cool thing, though? Is that first trade we won was 4 times bigger than the trade that we lost, right? We made 40 pips, and we only lost 10, right? We only lost 10, right? So, for trading days, I guess, we're 30 pips in profit. You know what I mean? Is that the most pips? No. But is that the least pips? Also no, right? So you just got to be grateful for that. You know what I mean? You show up and you take what you can get, right? And then for today, for tomorrow, moving into London and moving into the rest of the day and rest of the week before the weekend, I would expect this price to get filled. Does that mean you buy right now? No. I would say maybe you could buy like here. Target up here. That's a lot of pips though. If it hits, it hits. You know what I'm saying? But you would wait. I would say max 20 pips. If you were going to take this trade, we would wait for it to break back above. And once we broke above that, I would say it's good for buys. It might be a little rocky, possibly. But I think eventually throughout the rest of this tomorrow's trading day, maybe moving into Tuesday, maybe Wednesday, I think we could refill that price gap. Will we see higher than this? I don't know. Let's see. Let's check the news. Because NFP is going to be coming up next week. This fucking month's already over. Can you guys believe that? This month's already over? 2 months of the year is already gone. And I feel like I haven't accomplished nothing yet. But we will. We will accomplish more. Unemployment claims came out. So why the fuck did the market go good? Why did the market tank today? It's kind of confusing. Why would the market react positively? Is the question. So we have PCE. This has to do with CPI. I'm not even gonna act like I'm gonna predict it right. Unemployment's high. Unemployment's high from last month. That usually means, so I wouldn't be surprised if this was a negative release tomorrow. It's not going to be off that much. These are always usually pretty close. But I wouldn't be surprised if this was 0.2, which is just going to be less than the forecast. Reason why is because it means people are spending less money, pretty much, is what this is going to be analyzing. It's a form of how much money is being spent. So if that money is, if people are claiming to be unemployed more, then that typically means that people are spending less money. So that's what I would say. So if this is a bullish, if this is a negative report, that higher, right? Along with the fact that we're at a very strong psychological level of 4,000. We have slight divergence here if we're looking at this. You know what I mean? We have this going up. That's divergence. This is going down. Stochastic's going up. That's going down. Overall, I would say bullish. How far? I don't know. Is the entire move going to happen tomorrow? It could. But I wouldn't say we reach this level if we do again until maybe Tuesday, more or less. Tuesday or Wednesday, I'd say comfortably. And then we're probably going to consolidate there until NFP happens, which is the first Friday of the month. So for this example, for us, the first Friday of the month is going to be the 7th. So March 7th. What is this? Dollar firms as Trump's tariffs loom. Oh, man. Okay, well. Let's see what this says. Trump's tariffs, dollar drew safe haven support on Friday ahead of the U.S. president's impending tariffs. Those two headed for a monthly loss as investors weighed those threats against a darkening U.S. growth outlook. I don't care about the yen. I don't care about the yen. And broader market resistance sank to its lowest point in 3 weeks. The Euro USD struggled at a 2-week low. It was monthly gain. The risk off moves in currency came when Trump on Thursday said his proposed that's why the market tanked. So even though the news for the dollar was negative today, the reason why the dollar still gained value is because of the stuff that Trump is saying about the tariffs is basically just saying that it's going to happen next week. And that caused investors, I guess, on a macro level to go towards a more safe view for their money instead of having their money invested into stocks and crypto or risk assets. They liquidate and they go back and they hold cash pretty much, just in case. I guess people start thinking in case shit pops off or something like that. You know what I mean? That's just a psychological level or reason as to why that happens. So I guess even though the dollar had bad news, people would still rather be holding the dollar rather than holding stocks or something like that, for lack of better words. So the risk-off moves in currencies came after Trump said that his tariffs will happen on March 4th, defying expectations of those in the market who were hoping for a further delay in the implementation of these levies. The dollar briefly rose. I don't care about the yuan. Who cares? The dollar. No one cares. All that's left for the greenback hovering near a 1-week top against a basket of currencies. The dollar index stood at 107, having jumped almost an entire basis point. The dollar continues to face downward pressure. So buyers were in the market. So people are still buying right now. It's just that the reason that drop off happened was because of the tariffs, I guess. That shit pisses me off sometimes. You know what I mean? Because you can't predict that. You know what I'm saying? You can't. You know what I mean? How? You know, unless you're watching the news all the time. You know what I mean? How are you gonna? You know, you gotta be aware of. I guess that. You know, when especially now with all the political tension that's happening. I guess you know, you gotta be. I guess you gotta be on top of that. Thank you for showing the fundamental side of things. Of course. Do you think it has to do with the tariff threats? Yes. There you go. There you go. It does have to do with the tariffs. I didn't even see your question. That's funny. But the growth is that dominating, pushing yields lower. It's a little bit more increased volatility. Elsewhere, pound sterling is up. Pound New Zealand. Yeah, so for EU, we'll end this off by analyzing the dollar, and then I'll let you guys go. Yeah, sheesh, look at that shit, dude. That's crazy. Yeah, you couldn't have predicted that. I mean, you could have. I mean, personally, I've been a little bit behind this month, you know, for lack of better words. You know, I've been a little bit busy, you know, the B-Day month and stuff, you know, like that. You know, I got back from vacation, dude, and I haven't been on the news like I should have been, I guess. So I guess I could have maybe taken that into consideration, but, you know, woulda, coulda, shoulda, you know what I'm saying? So, we're here now. Moving into the new week, though, I think we could. You know, I don't think the dollar will continue. Could though, it could. That looks like we're in a bullish formation right now for the dollar. Right? Even if we want to consider this a neckline right here. Right? I guess you could say double bottom, triple bottom, whatever you want to call it. You could say that. Stochastic and RSI are super overbought right now though. So I think maybe we'll come back down. I think we'll come back down. At least to right here. You know, right there in that middle sweet spot. But only time will tell. So, with that being said, ladies and gentlemen, I don't know where it's going to go, right? So, we'll just have to wait and see. I do have a bullish outlook on Euro USD tomorrow because the news I'm expecting to be negative, and I'm expecting that price gap to get filled. But, you know, it's anyone's game at that point. You know what I'm saying? So, is that the trade? We'll have to wait and see. If I do end up taking an entry on this, I'll send it out in the Discord. Or if it's too late, you know, I'll just update you guys with how the trade turned out next week. But aside from that, that's pretty much all I got for you guys. I think we covered everything. We covered the first trade, we covered the second trade, and we covered where we're at right now. So I guess before I end the call off, does anybody have any questions, comments, concerns, anything confusing them? Something they want to get cleared up, anything of that nature, while I go ahead and get ready to end off this call. Does anyone have anything they want to say? Confusions? How and where can I go to analyze individual currencies? You can't, dude. The only one you can analyze is the dollar. I mean, you can, but the only one you need to analyze is the DXY. In the Forex course as well, I have an entire video. I think it's in chapter 6 or chapter 7 of the Forex course, where I go over how to use the DXY correctly and how it correlates to everything. But pretty much you just go to TradingView, you type in DXY, and that stands for the US dollar index fund, right? And it's just a unit of measurement to measure the dollar. And I go in depth again. I go in depth into that into the video, inside the videos in the course. But I couldn't tell you how to check, like, the euro by itself. I guess you could. I mean, let's see. And I'll end the call off with that. I don't know if you could. Nah, all these are traded against something. Let me type in pound. Let me see. Pound sterling, maybe. Oops. Yeah, no, it's just pound. It's, yeah, for these, maybe if you lived in another country, you could, but yeah, I don't even think. I mean, honestly, you probably can't, just probably because the dollar index is probably only even a thing because of how relevant the dollar is. You know what I'm saying?
everything in the world is traded against the dollar. The dollar isn't traded against anything else, if that makes sense. You know what I mean? So it's more important to track what the dollar is doing compared to what, the Aussie is doing. You know what I'm saying? So no chasers, we missed one entry, nothing else. Hopefully you can catch something tomorrow. Yeah, man. Hopefully we're able to. If not, then it's a new week. We'll end the week off, and then we go from there, right? So with that, guys, I guess I'll go ahead and end it off. That way I don't take too much more of your time, right? But I appreciate you all hopping on here tonight. If you guys learned something and gained some value, shout me on Instagram. You know what I mean? At Ollie Cashflow. And that goes a very long way for me, guys. It goes farther than you think it does. You know what I mean? And I appreciate it from the bottom of my heart. And with that, guys, if you have any questions, comments, concerns, you know where to reach me in the Discord or inside of our private messages with each other, right? DM me or text me, whatever you want to do. But with that, I'm going to go ahead and end the call off. I wish you all the best this weekend. If you use the weekend to your advantage, make sure you study hard, back test, and do the things you need to do to get ahead and put yourself ahead of the competition come Monday, right? So with that, guys, I love you all. God bless you. And I will see you all at the top because the bottom is way too crowded, ladies and gentlemen. Peace.